So, first, thank you for the CGAP for this invitation. Obviously, technology and cybersecurity risk is one of the most eruptive and disruptive also risk for the continuity of the operations of financial inclusion worldwide. To describe resilience, there is a quote I like. It says that resilience is about building bridges, not walls, and this is particularly appropriate for cyber risk. To give a little background, I have more than 10 years experience of cybersecurity for financial inclusion. We started the first cybersecurity operation center for financial inclusion in Senegal, thanks to the support from the government of Luxembourg and the EIB also at the time. After meeting with tens of regulators, supervisors, financial institutions throughout Africa, we found out that some key components were missing to increase cyber resilience in the continent. And so we have conducted a joint discussion with the CGAP that led to the concept of a regional cybersecurity resource center. We then got funding from the IFDB and specifically the Africa Digital Financial Inclusion. So I want to thank the ADFI team and Sheila Okiro for their support and patience also since this time. So we strive to provide operational and practical results and practices to meet the challenges of financial inclusion. So SCRC is a public-private partnership, a not-for-profit public-private partnership that has a sustainable target because, of course, just a project cannot fix things like cyber resilience in just a few years. So the idea is really to build an organization that will be long-standing and support the community in Africa, which is big and complicated enough to start with. We collect and analyze a lot of data about cyber incidents striking the African financial sector, and we don't have time today, but I can assure you that all sectors are really targeted hard, from central banks, insurance company, telecom networks, microfinance, banks, everybody. So what we see also is that incidents are really much more frequent and severe, also with more sophisticated threats. We have a good example in Kenya in 2024, where a big incident blocked about 5,000 government and financial services, which put a big mess in the country for 1 week. So imagine for 1 week or 2 weeks or more, because severe incident can lead really to disruption for several weeks or several months. If you want to send money to your relatives in the back country or get pensions or get money from abroad, it can be very complicated for many populations. One figure on the technology risk. The University of Luxembourg have made a research on all mobile banking application in West Africa Monetary Union. So it's about 160 banks and 49 applications. And they found out that all these 49, so 100%, were vulnerable. And 50% of these applications were also vulnerable with more than 15 critical or medium-sized vulnerabilities. That means that any dump can break any of the applications in West Africa Monetary Union in just a matter of hours. Well, I'm sorry not to be too much optimistic. What is funny in a way is that the researcher contacted the banks to tell them, okay, we have found out some vulnerabilities. Could you please repair them? And no bank answered to this requirement for improving the situation. We have a very big gap in people side, regulatory and supervisory side, intelligence side, which is one of the most critical, and also on the funding part. I am not going into all the details we will have in the documents, but really there are many things we can start together. One important thing is the funding, as there is a song, a tune by Charlie Parker saying, "Romance without finance does not make sense." You probably know it. And I think it is especially appropriate for this issue. So how can we try to bring some practical solutions? Is it working? Yes, investors and donors. So we have things we can do to collaborate more within this sector. Today they are a bit limited and not necessarily consistent efforts from the donors. We think that we can improve this. On the policy makers, on the policymakers side, we have found out in our work that it is very important to have their strong collaboration to reach the individual financial institutions. We have, to be honest, a bit underestimated this in the first stage of our work, because in more advanced countries, in Europe or in the US, for example, institutions are more ready to collaborate without regulators' motivation, if I may say. Oops. We are starting many important work with ADFI, with Alliance for Financial Inclusion. We will start next week a task force on developing information sharing and capacity building. We will be also working with MEFMI, Macroeconomic and Financial Management Institute of Southern and Eastern Africa. We have worked with the ESC community, and this we can capitalize on this work that brings some perspective to the development of regulation and supervision. And ultimately, we could also imagine a dedicated vehicle for capacity building for all regulators and supervisors in cybersecurity in Africa, including financial regulators, telecom, insurance regulator. We see that there are huge needs in that, and we really need to make some impact. On the FSP, DFSP side, yes, I'm here.
Jean-Louis.
Yeah.
What is the most important thing that you're going to say next?
I have the minute from
as your final thought.
Yes.
As we head towards 8 minutes.
I have the minute from the Queen.
By royal decree. Okay.
So the development of the information sharing community is very important. It is taking a good, it is having a good momentum now. So we count also on your collaboration to support that. We also aim to develop other regional hubs in Africa, which is very important for the proximity of the operations. So at the end, responsible finance is also including responsible behavior in terms of cybersecurity. And it comes at a cost, of course, and I'm quite convinced that with all this nice audience, we can find all the funding and momentum and ideas and networking also to support these initiatives. Thank you so much.
All right, first, thank you so much to CGAP. Sophie and your team, you were first after the pandemic to sort of reach out and say, what could consumer advocates do on digital finance? And here we are, and we're so grateful and proud to be here. I think, what does this work? What is consumer advocacy? Who the heck are Consumers International? We are the best thing you may never have heard of before, but as of now, 200 amazing organizations that are independent in 115 countries now. Here in the Netherlands, Consumentenbond, amazing organization. They are speaking to consumers, informing them, advising them, solving complaints, and then doing research and taking that advocacy to regulators and policymakers. They're really sort of the trusted independent voice for consumers. How does the handshake between consumer and the marketplace work? What does it look like at a crazy time of change? Now, we work on food, energy, digital finance. It's really thanks to this room that we're focusing there. And this is what it looks like. I hope just a few, as we went on this journey, Shamina, thank you, the Gates Foundation has helped us build up. And across here, there's Rwanda, Malaysia, Fiji, Mexico, Brazil, financial literacy, radio shows, school programs are really amazing. It shows what you can do when we work together. What have we found? Well, on paper, we're all in the green. The frameworks, and we would agree with this, are getting better and better and better. These are the OECD high-level principles for consumer financial protection. Consumers International, I should say, the organization I serve, was part of putting those together and then updating them. And there's green there. We would point out that 40% of countries still don't have consumer protection. Only 48% have data protection. I think something like 20 countries have anything that could cover crypto. We need to play catch up. And that means that when you look at what those advocates will say as the representatives of consumers in the marketplace, people are falling through those cracks. The handshake is weak, and it's getting weaker. And they will point to, this is from measurement we've done in 22 and 23, they will point to these practical things that we need to build back in the marketplace. And I would argue that if you say, consumer advocates are the doctors for consumers in the marketplace. If you're a doctor, if 90%, 9 out of 10 doctors are telling you need to deal with something, I think we need to listen. I think we need to build and mend. What's the impact directly from consumers? Again, from our work, we've seen that 52%. Now, this shows the impact on the more vulnerable consumers. But vulnerability is not just the classic definition of people. It includes people who now have to take care of an elderly relative, for example, or somebody who might not speak the language of the country they're in. And so there's a greater group of us that are falling into that trap. And what we're seeing is that there is a significant more risk for them to fall prey to scams, to need redressal that doesn't necessarily work for them, or that just are far less confident. So this consumer advocates worry about day in, day out. What can we do? The thing is, we are seeing those points of light that could build to a guiding star. Back to the points earlier, this is not a silver bullet. This is very much a mindset change. As an ex-marketer and now in an NGO, I get quite excited about this, she says as she trips over chairs, way too excited, because I really think this is the future of consumer care. The organizations that lean into this are building for the future. What does it consist of? Taking consumer protection or consumer care, really, as foundational. Looking at the way in which we talk about vulnerability in policy frameworks, really starting from that standpoint. We point to the UK, point to Malaysia as examples where that's starting out. When we innovate, embed those points about redress, about transparency, about fairness in the way that the products and services are deployed. Again, interesting examples about folks saying, okay, yeah, we can take on that burden. We don't expect you to be aware about how this is happening or to have to deal with that problem. Strengthening supervision and enforcement. The rules don't make any sense unless you actually enforce them. And finally, part of this is self-serving. We would say we are consumer voice. You've got to listen to people. We are going through a time in history when there is so much change. You can't make that change happen without some form of feedback loop. Consumers are the ones who can give you that feedback and help you find the opportunities as well as point out the problems, change the way in which consumer protection is seen. I love to see, we are changing as an organization. In the past, consumer advocates would just be the ones who would be shouting at businesses and sort of, pointing out the flaws. We're changing dramatically and trying to innovate and ask ourselves, what can we do differently in that ecosystem that we heard about? Innovating, thinking about how do we create tools for consumers? How do we build with businesses? How do we fit in and act as a constructive partner in this? So, resilience is possible. It's exciting, actually. One, we are hoping to go towards and celebrate and support the launch of Findex by sharing some of this. I hope you'll join us in that. And two, back to that point about consumers are not beneficiaries, they're co-creators. Let's build with them. I'm extremely grateful for the 7 minutes, because frankly, Femi, NGOs usually get about 2. So this is about 3 times as long. Thank you.
Thanks very much, Femi, and I feel like I need to start straight away to get the most out of my 7 minutes. So good afternoon, everyone. It's lovely to be here, and thank you to CGAP for asking me to come. I'm Faith Reynolds. I'm from Devon Fields Consulting, and I've worked in a variety of roles across financial services, both as a regulator, but also as a consumer representative, both at the UK Financial Conduct Authority, the Payment Systems Regulator, and also Open Banking Limited. So I just want to reinforce what Helena says today about the importance of the consumer voice in supporting industry and regulators in taking a customer-centric approach, both to reduce the risk but also to capitalise on the opportunities that industry sometimes misses because it's not close enough to its customers. So today I've been asked to explore what public authorities can do to build a responsible digital financial ecosystem. And, I need to do my slide. Here we go. So I'm conscious that for many authorities, it can sometimes feel a little bit like an uphill struggle when we're considering all of the risks discussed. But nevertheless, resilient and inclusive financial ecosystems aren't just good for individual consumers or small communities, but they're good for firms, fintechs, and business. And there are strong correlations between financial resilience, economic stability, investment, and growth. So today I want to emphasise the importance of collaboration, but also ensuring the industry takes some responsibility for some of these good outcomes, because it also stands to gain. So what can public authorities do? And I've got a few points that I'm going to bring to light here. Firstly, it's important to be clear about the purpose of the work you're doing and to state the outcomes you're seeking to achieve, to steer the industry, and then measure the industry against those. A good example in the UK is the Consumer Duty Regulation, which requires firms to focus attention on achieving good outcomes for retail customers. It requires them to act in good faith, avoid foreseeable harm, and support customers to achieve their financial objectives. That means firms need to know what consumers' financial objectives even are. So what's novel is that the duty shifts the regulatory emphasis from a process of compliance to placing a clear onus on firms to proactively gather, monitor, and evidence data that shows their products, services, and communications are working in the interests of consumers, including vulnerable consumers. And so authorities are pushing more responsibility to industry to consider how they themselves can support financial resilience and the wider advantages that brings them as industry. So the second thing is that it's important to have resources to do this with. If central banks, I think Helena's already picked it up, great to set rules, but if you don't have the resources to support and enforce those, supervise and enforce those rules, it's really sort of almost not helpful. And we had this in the UK. We've seen it in the UK. The Consumer Credit Act had strong consumer protections, but it was being delivered and monitored and supervised by the Office of Fair Trading, which is a government office, and it didn't have resources, which meant that people were experiencing harm. In 2014, that responsibility moved to the regulator. The FCA, funded by levies from industry has been able to implement and enforce tighter rules around things like affordability checks, mis-selling in credit broking, high-cost short-term credit lending. It's made big strides to improve the market for credit, which then has an impact on the delivery of digital credit, because actually the enforcement is there to make sure firms are working the right way. It's an example of how industry paying its fair share through levies is actually helped to protect consumers and ensure market integrity so that they're getting the best out of that market. So incentivising the right behaviour. Fraud and scams are particularly detrimental and especially prevalent in the digital world. There's a picture here which just sort of shows the impact of a new reimbursement regulation in the UK where victims of authorised push payments are being reimbursed quickly with liability split 50-50 between the sending bank of the payment and the receiving bank. The work's important because it realigns incentives for the industry to stop scams and fraud before they take place, because they are on the hook for making a payment back to the consumer. And it's having a positive impact. 80% of money lost to app scams was returned to consumers in the first 3 months of the implementation, totaling around 27 million. 84% of cases were closed in 5 days. And despite a lot of concern about the moral hazard, there hasn't been a massive increase in consumers claiming. So this shows that firms can actually help, and it's really to encourage firms to work together to stop fraud before it happens. So finally, on my last slide, I'm going to whiz through these because they're a bit sort of softer, but this is about collaboration. Alongside working with industry on creating good outcomes, it's important to collaborate with others like academic institutions, civil society. We want to promote innovation and competition, but we also need experts in AI, cryptocurrency, quantum computing, leveraging their expertise into our roles as public authorities. And the FCA has done quite a lot of work in this area with organisations like the Alan Turing Institute or by hosting competitions for research papers. Collaborating with other regulators is vital. Many of the issues that can undermine financial resilience are in fact cross-cutting. Online safety, digital marketing, data privacy, algorithmic transparency, these are all cross-cutting issues, and collaboration allows you to share knowledge, expertise, and build collective insights. The Digital Regulation Cooperation Forum is an example of different regulators coming together in the UK. And so finally, I'm going to ditch automate what you can, because Helen has already covered that with subtech, but I'm going to say get creative. Have a look at where money is hanging around in your systems. There will be money. There are large corporates who are working in your countries. There is money. Look at where it's hanging around. In the UK, government worked with industry and regulators to identify dormant asset monies, money that sat in accounts that cannot be connected back to the person who owns it. That money is in billions of pounds, and it's being redistributed through trusts and through NGOs to support financial inclusion. I'm a non-executive director at Fair for All Finance, and we've distributed over 135 million into affordable credit providers to drive financial inclusion, and that money has come from dormant assets. So get creative. So in summary, clarify your purpose, hold industry to account against the intended outcomes and not simple compliance. Focus them on delivering financial resilience themselves. Smartly resource through levies, special project fees, dormant asset monies. Align incentives with those of your customers to prevent illegal activity and harm, because the industry has something to gain from market integrity and healthy, stable markets. Collaborate with academics, peers, civil societies, and use digital technologies to drive efficiency and improve outcomes yourself. So I'm there, I think. But thank you very much.
Thank you, Femi. Thank you, CGAP, for these minutes to share with you. And just before jumping into risks and solutions, I want to point out why we see technology as the main engine of this innovation occurring in financial services and the type of opportunities that also technology can raise. So coming from a fintech, we see that technology today enables three very necessary things that we need to scale and to make things big. First is about access. Today we have the correct connectivity, the proper devices, the great user experiences that allow people to create and to operate digital accounts from their mobile phones at the reach just of their thumbs. Second, we are talking about scalability. We are now seeing infrastructure being able to process millions of digital online payments, real-time, 24/7. I believe UPI, Pix in Brazil are great examples of that. We are seeing millions of credit offering that can be done by a second, just pushing a button and reaching a bunch and a few parts of the population at the same time. And last but not least, we are talking about inclusion. Technology allows us to process a big quantity of data that, well used today, can help us transform traditional score systems into more data-driven score modelings that, once again, allows us to reach underserved or unserved people. I was in China 4 weeks ago. I saw lots of incredible experiences. I decided to bring you just 3 examples of what technology is doing nowadays. Let's start with credits. First, the usage of unstructured data, providing more than 600,000 variables, enhancing risk models and allowing more people to reach credit lines with better credit conditions. If you see at that video, we are talking about credit for farmers. So basically what the app allows is the farmer to write down the address of the farm. Then they can do a validation online real time with public registries. And once they confirm that the farm belongs to that farmer, they can start to recommend him what type of crops to plant according to the weather condition, according to the soil condition of that part and the location of the farm. And then with satellite monitoring, they can enhance and extend credit offering without even the farmer having to request for a credit line. Or on the other side, they can suggest an insurance policy before it's too late. Incredible. Let's go to the middle one and meet Angel. This is an AI doctor. She was trained with more than 5 million clinic records to become a general medic, receiving your blood test, your analysis, providing you references and feedback after seeing what you can ask her and interact to her. She can delivers you to other specialists, also trained AI doctors, or even connect you by telephone with a real doctor if you need a prescription. And it's not just about this first step, it's the whole value prop connected. When the medicine is also part of their value prop, and once the prescription is being done, medicine is sent to your house right away, and the connection with your insurance company, in case you have it, is done real time, so the refund can reach your digital account as soon as possible. So the funny thing, not that funny in a few years, is that this application believes that in less than 3 years, these AI doctors that are reaching people for free are going to be top 10 quality doctors in China. Amazing. And last but not least, look at this green loyalty program. This company is not thinking more about coupons or discounts. They are knowing that people have a big responsibility with green economy. So their loyalty program, as they are embedded in their daily needs, they track a lot of the things that users do on a daily basis. Whatever they track, you get compensated with carbon footprints. For example, if I go to my work taking a bus or a subway, I will gain footprints, and the more footprints I collect, the more beautiful my digital tree will become, but also real trees are going to be planted under my name. on top of my activity, my daily activity. And they brought this interesting part of the interaction where every day people, they wake up in the morning and there's the game where you can steal food carbon prints from other users, or you have to protect yours. So the whole interaction is done across a green and responsible action. But yes, as you may know, a very famous economist says there's no free lunch. So with these great powers comes great responsibility. We're not seeing the video, but I will tell you what is going on in there. First of all, don't worry, I'm not violating anyone's identity. These are all real deep fake images that tried to enter our platform last week, created with AI, and having our models trained on a daily basis to identify fraudsters from real people trying to do their job. So yes, we have and we are part of this change. We need to be responsible not to bring innovation, but to bring secure innovation around all this fraud that comes along with identity takeover, account takeovers, devices takeovers, cybersecurity, fraud, scams. And on top of these bad words, companies can even provide a new value prop, a differentiation. Let me give you an example of what we're doing. If you are caught with a device takeover or an account takeover, our company will cover the loss for you. Why? The reason is because we know that our technology has been vulnerated and we feel responsible for that. And that's part of a value prop that we believe will make you choose our company. But that is not enough. If you look at devices takeovers and viruses, that's a small piece of what's going on. The big chunk comes from scams, from people interacting with the fraudster, giving them credentials, sending them money. So reactive actions are not enough. We need to focus on education and on preventive actions to make this stop and make this decrease. Can we do this alone? Of course not. I heard the word ecosystem a lot today. So here we are an industry, and as an industry, we are on the public side, the private side, the regulator side. We need to invest in technology, we need to invest in infrastructure, we need to invest in models that will lead us to risk zero. Of course not. That's a wishful thinking. But we need to reach into the correct balance where gains and losses will allow us to get the best of all these new trends, having these risks under control. Thank you so much.